to Moms in the Zone. We thank all our guests and viewers for tuning in to this episode. Today's guest is Mr. Eric Chenoweth. He is the founder and CEO of Leverage Disability and Life Insurance Services. Welcome to Moms in the Zone, Eric. How are you?
I'm great. Thank you so much for having me on. I appreciate it.
Yes, thank you for being with us today. So the first thing that we like to do on Moms in the Zone right out the gate, tell our viewers a little bit about you, your background, so they can get to know you a little bit better.
Great. Yeah, thank you so much. So born and raised in Orange County, California. I was a McDonald's All-American at Villa Park High School here. Went on to play at the University of Kansas, was an all-conference player there, was drafted by the Knicks in 2001. Then went on to play 8 years professionally, all over the world, NBA, D-League, overseas, and hung them up in 2008. Got into coaching for a couple of years, didn't make sense logistically or financially for me, so I got into the insurance industry 8 years ago, actually September 2012. Joined a firm in LA called Park Advisors. Was there for a great 6-year run, and then 2 years ago started my own firm here based in Orange County, California as well. Basically, my business model is very simple. I work with college and professional athletes for disability and life insurance needs. On the college landscape, I work with over 60 universities, mostly in the Power Five, for student athlete disability insurance needs, specifically permanent total disability, loss of value, and critical injury, which we'll go through later on in the call. And then once guys turn pro, I follow up with whoever their financial advisor or agent is to see what kind of insurance they need down in the future if they need it. But primarily the meat and potatoes of my business is the college space, working with universities, and I work with directly with compliance offices. As a couple of you might know on this call, I don't call parents directly. I don't do that. They can call me. That's perfectly fine. But I typically go through coaches and compliance officers to make sure we're doing everything on the up and up. And so that's my process. So again, been doing this 8 years now, and even with COVID and everything, my business has still been able to thrive and grow. And so, just looking forward to this college football season starting here pretty soon and going from there.
Absolutely. Absolutely. So I have a question for you. Thank you for just, taking the opportunity again to be on the show with us. And so this is a unique, interview because, what we do on Moms in the Zone, we get the perspectives and the journeys of how moms have navigated the sports arena with their students. And one of the things that we want to do as well in the zone is to be a resource. And so how, if a parent let me go back. The resources that you provide, when will a parent need to reach out to you? I know you offer life insurance and disability insurance. What would be the situation where parents say, hey, we need to give Eric a call? Because as even myself, having a son who plays D1, this is something new to me. So
yeah, to be honest with you, as soon as you identify that your son has the chance to play at the professional level is when you should be having a conversation about protecting those future earnings. It's never too soon to have a call either as well. So if your son's a 4-star, 5-star coming out of high school and they're going to play college football, obviously they need to be 3 years removed from high school in order to play in the NFL. But monitor their progress, see how they're doing. Are they starting to pop up on mock drafts? Are they starting to pop up on different things? Having them ranked high for their position. Are they all conference? Are they all American or what have you? And so once those awards and rewards start coming along and those accolades, you should be identifying that, hey, my son has a chance to play at the next level. So let's have a conversation with the experts in that space to protect these future earnings through disability insurance. I'm always open to have people call me. I don't solicit parents, obviously. I think I've told you that before, but parents call me, email me all the time, and I'll leave my email address after this so you guys can reach out if you need me. But again, and then also too, most of these big Power 5 programs have programs in place for their elite student athletes, in that they have education for the parents and education for the student athletes to let them know, hey, this is a conversation we're going to have coming up here about disability insurance. And so it's important for you to find out what your school's policy is on disability insurance. Are they going to help support with the student assistance fund to pay for premiums? Are they going to help 1 year, 2 years, what have you? Are they going to pay for PTD, LOV, CI, all three, none, what have you? And so it's important for, myself, you as the parents in the school to have a conversation so that all expectations are managed. And so we're all on the same page, moving forward with the process. So again, short story long, or long answer for a short question. But as soon as you identify your son as a potential pro is when you should be having a conversation.
Okay. And go ahead, Andrea.
Oh, I'm sorry. I had a question. So when you're going through the recruiting process, is this a question that you should be asking, as parents or, touring campuses? I mean, how do you ask this question?
You know what? Absolutely. You should ask every question you want to ask. I mean, I don't think any questions are out of bounds. I mean, obviously, if you're sending your son off to this major university, you should get as much information as you want to have. And so, and I know this too, that the insurance piece is starting to become a big part of the recruiting process, in that, schools will say, hey, you're going to be on TV every Saturday. You're going to wear Nike. You're going to play in these amazing facilities. You're going to get this great education. We're going to travel like this, look at our locker room, and we're going to pay for your insurance. And so it's just another thing that's added to the arms race in recruiting. And so, of course, and also too, I always tell parents to be humble and appreciative and just say, hey, this is something we're interested in. Can you please educate us on what you guys do? When I see parents get, entitled or demanding or what have you, it a lot of times the conversation or process goes sour. And so most parents, 99.9% of parents, are fantastic, and they're going to do things the right way. But absolutely, when you're walking around that campus with your host or talking to your position coach or whoever you're talking to in the recruiting process, you should absolutely ask them about insurance and what have they done in the past? What are they going to continue to do in the future? What are the parameters of supporting for me? Does my son have to be a projected first round pick? Does my son have to be, projected in any round at all? What have you? It's just, again, more information, the better, more questions, the better.
Okay, so specifically, what would I say? Hi, I appreciate this opportunity. I'm just, role playing. I'm a parent. Do you have insurance for my son? I mean, that's kind of a broad statement. How do I specifically say it so they know that I'm referencing what you're talking about?
Yeah, if you're talking to the position coach or compliance director or development office, whatever, just be like, hey, I'd love to have a conversation about disability insurance for my son. Okay. Do you guys support for this? Is it available? What's your process in this? Just, and obviously that's why we're having this conversation, because none of these parents understand any of this. And there's like me and a couple other people that do it. And so unless you're talking to us specifically, you're not going to get this information. And so, yeah, I would, and also too, as you're being recruited, you're going to develop relationships and develop trust, and you're going to be in a position where you're going to feel comfortable to ask these questions. Go ask a question, just be yourself and say, hey, this is a concern we have. This is something that's come up with other schools. Maybe what is your process with this? And then just go from there.
Okay.
Yeah.
I have a question. So you mentioned elite schools, Power 5 schools, but does this also apply to D2, D3 schools, HBCUs as well?
Yes, absolutely. And I, obviously we focus on the Power 5 just because they have so many potential pros. There's the Power 5, and then there's the Group of 5, which is the next tier of programs. And there's also D2 programs as well, HBCU programs as well, where there are professionals coming out of those schools. And so I hired someone actually this year that he's my director of research. All he does all day long is find potential NFL prospects or NBA, NHL, and Major League Baseball, what have you, so that we get a list of all these potential pros, and we reach out directly to the university's compliance offices and say, hey, we've identified this student athlete as a potential professional. We'd love to have a conversation with you regarding disability insurance for him. And then we take it from there. A lot of times they're very receptive of that, and they'll say, great, let us know what you can do. Let's have a conversation, what have you. But a lot of these schools, they welcome the opportunity to be in these situations. A lot of these football coaches, they want to have star players that they get insurance for. It's good for the student athlete. It's good for the program. It's good for everybody involved, and to protect their future earnings. And so, yes, again, long answer for a short question, but yeah, across all ranks, all programs, if you're a potential pro and you have a chance of being drafted and playing professionally, you will qualify for coverage, and we can find solutions for you.
Can you define the Power Five for maybe some of those moms who don't know what that is?
Yeah, sure. The Power Five is SEC, Southeastern Conference, ACC, Atlantic Coast Conference, the Big 12, the Big 10, and the Pac-12. Those are the Power Five. I didn't go into the Power Five. Those are just the Power Five because they're the biggest 5 conferences in the country, and all of them also participate in the FBS, which is the football playoff system, where the winners from each conference are entered into the bowl system and into the college football playoff, which is the top 4 programs that play off for the national championship. And typically, those schools come from those Power 5 programs. Now, every once in a while, there's an outlier from a program that's not in the Power 5, but for the most part, you're going to see schools from the Power 5 playing for the national championship every year, or in the big bowl games at least.
And I have a question for you, Eric. Is when you mentioned the coverage, what specifically does the disability? We know, disability if they become disabled while they're, playing the sport, but what is all in that, as far as disability coverage? What does it include?
Yeah, so let's dive into the details here. This is a one sheet that I send out to all the universities I work with and anybody that's interested in coverage. It's just a really simple one page that provides, a definition for the types of coverage and the process to secure the coverage. So let's just start with permanent total disability, okay? Permanent total disability essentially means that if you have an injury or illness that you can never recover from to play football ever again, okay, that you would be able to collect on your permanent total disability policy after your 12-month elimination period is satisfied. So let's go through this scenario. So say like September 5th, 2020, you secure a $1 million permanent total disability insurance policy, right? You go out on September 6th and you're playing a football practice and someone comes across the middle and tackles you, and you suffer a spinal injury, and you're carried off the field, and they do evaluations, and a medical team has determined that you are never going to be able to recover from that injury to play football ever again. So your career then be essentially over due to that injury. And so essentially your 12-month elimination period would start on September 6, 2020. On September 7th, 2021, you would then be paid your $1 million benefit. The reason why there's a 12-month elimination period, or we also call it a waiting period, is just because they want to ensure, number one, that you maintain disability, number one, and they also want to ensure they give themselves time to collect medical information, maybe have a third-party physician do an evaluation, do all the different items that are required to process a claim, and then a year and a day you'll be paid your PTD benefit. Now, it's very important to understand that it's coverage for injury, which we're very aware of, but it's also coverage for illness as well too. So for example, if one of your sons were to contract COVID, for example, which everybody's worried about right now, it's the hot topic of everything, and that COVID essentially damages their lungs, or what we're seeing now is I can't remember the term of it.
Yeah,
but
for the heart.
Yeah, for the heart. Yeah,
the heart enlargement. Your heart can be enlarged. Your kidneys can be, whatever it is. If there's an internal damage to your body that you cannot recover from to go on to play football, that's an illness. And so you're going to be able to, if you can't recover from it, you're going to be able to collect on that policy. I've had a claim paid. In the process of a claim right now for ADEM. One of my clients, he suffered strep throat. It seeped into his spinal canal, and he has lesions on his spine now. And he's actually from Indianapolis, and he's not able to return to play basketball ever again. So we're in the process of filing a claim for him. He just reached his 12-month elimination period. And so we're in the process of wrapping that claim up for him. Horrible situation. And then also too, I've had a college quarterback shatter his ankle. He had surgery to recover, but when he was playing, he couldn't plant, couldn't scramble, couldn't throw the same way. So he was able to collect on a permanent total disability policy. We saw at Baylor, there was a basketball player, pretty famous place, was diagnosed with Marfan syndrome. He was able to collect on a policy as well too. So It's 24 hours a day worldwide. And it's for injury or illness. So if your son's on the football field, obviously he's covered, but if he's in his car, driving from campus home to his apartment, what have you, gets in a car accident, they're covered for that as well too. So that's permanent total disability. You know, a lot of people just dismiss it. They say, oh, that's never going to happen. Or, you know, these young kids they think they're invincible. So I'm going to recover from this and I'll come back. So that brings me to the next couple of products. So what Lloyd's of London did is they said, okay, and Lloyd's of London is the underwriter on these policies. Lloyd's of London is not an insurance company. And I can explain the dynamic of Lloyd's later on, but I'm going to stick to the product right here for now. So, and then also too, let's pull up this definition of PTD right here as well too. So permanent total disability suffers a permanent total disablement solely and directly as a result of injury, illness occurring during the period of insurance within 12 months of the date of injury or illness, exhausted the terms, warranties, condition. So that's how permanent total disability is defined right there. Your career is over, you're never playing football again. And also too, if you come back to play football within 48 months of receiving your benefit, you would then have to pay the benefit back. So they want to make sure that you're done, you're moving on from football, you're going to go, you know, get your master's or go to law school or med school, what have you, your football career is over. The next product that we can talk about here is loss of value. The way loss of value works is what they do is it's a rider to your PTD policy. So you buy a PTD policy first, and then you add a loss of value rider to that policy. The way loss of value works is to insure someone between where they're projected in the draft and where they actually fall in the draft due to the injury or illness. Okay, so follow me on this because it can be confusing at times for a lot of parents. So the way this works is they're going to say, okay, just hypothetically, we'll say, okay, your son's a projected top 5 pick, right? So the top 5 pick in the NFL draft is going to sign a 4-year, $40 million NFL rookie contract. Okay, you're going to get a massive signing bonus up front, probably $35 million, something like that, and they'll make the remaining $5 million or so over the next 4 years. So let's take that 4 years, $40 million payout for the top 5 picks. What we'll do with that projection is we'll say, okay, you're projected to go top 5. We're going to set apart a point in the draft where if you fall past that point in the draft due to an injury or illness, we will then start indemnifying you up to the amount of insurance that you purchase. So for example, let's make it really simple. Say like someone buys a $1 million PTD policy first, and they add a $1 million loss of value rider to their policy. Okay, they're projected in the top 5, which is approximately, you know, well, the first pick's 40 million, but I'd say the 5th pick's probably 35. What they'll do is they'll sign a threshold, say probably the 25th pick, which is a lot lower number, probably around $15-16 million. Okay, and they'll say, okay, your projected top 5, your threshold or trigger point where you would start collecting would be that, say, 25th pick. And then we'll pay you up to $1 million if you fall to, say, the 3rd round and sign for, you know, $7 million over 4 years. So for example, you know, Johnny Starr, quarterback, you know, he's projected top 5. He's got $1 million PTD policy. He's got $1 million loss of value rider on that. Playing great, everything's going awesome, and then boom, week 6, he tears his ACL and he's out for the rest of the season. Okay, and once he has an injury, that's a triggering event. That's the event that we need to have to happen. Okay, and so if that injury makes him fall past that, say, 25th pick where we assigned his threshold, he is then in the money to be paid up to $1 million at pick 26, 27, so on until where he signs. So what they do is they take the difference between what your threshold was and what you signed for and paying the difference. Now, if you only had $1 million of coverage, he's only going to get $1 million benefit. So a lot of guys I see, if they're top projected, are buying upwards of $5 million to $7 million of loss of value benefits. So if they get hurt and fall out of the 1st round all the way to, say, the 4th round or what have you, and they sign for maybe $5 million over 4 years, well, their threshold was 15, they bought $7 million, they signed for 5, they'd have a full $7 million benefit. Now, if they bought $10 million in coverage, they'd have a full $10 million benefit due to that injury, okay? And so that's the way loss of value works. Here's a sample of the wording, and this is what has to trigger the the payout to happen, okay? Requires medical attention. We need to make sure we have medical documents. We need to have an opinion from a physician. We need to have, you know, the surgical reports, the rehab reports, all those different things. So A, requires medical treatment. B, the result is of the players unable to play for at least 3 games of the regular season, including bowl games or during the off season. So for example, or fails an exit physical. So for example, if he gets hurt mid-season and is out the rest of the season, the 3 games are covered. He's going to miss that many games. Now, if they're in the, say, like we talked about before, the college football playoff, and they're in the championship game, and he gets hurt in the championship game, and essentially what would happen is he would fail his exit physical, which would be triggering, that would make up for missing the 3 games. That would trigger also as well a qualifying injury if he fails his physical. And then finally, the third part would be, as long as, which it kind of coincides with A, is that a healthcare practitioner specializing in college football, this last sentence is most important, causes substantial and material deterioration in his ability to perform his occupation as a college football player. So that's what's very, very important right there. I want people to understand that. This is the most important thing you'll hear all day on this call. Causes substantial and material deterioration in his ability to perform his occupation as a college football player, okay? It's important to understand that, because I want people to know that bruises, sprains, and strains are to be expected. They happen all the time. You're playing football. You're in full pads. You are going to get sore. You are going to have things break down. But once you have an injury or illness that causes a surgery or causes you to miss a significant amount of time, you are then going to be qualifying for loss of value if you bought the coverage. I don't want anybody to ever have a false sense of security that they're going to collect on a loss of value policy if they, you know, sprain their ankle and miss 1 game. You're not going to get paid. And I want people to know that all the time. I don't know what other insurance producers out there are saying, but I know what I say, and I can hang my hat on that saying, listen, you're going to have to miss at least a quarter of the season, like I said, with 3 games. You're going to have to fail an exit physical, and you're going to have a serious injury or illness that causes substantial and material deterioration in your ability to perform your occupation as a football player, okay? And the reason why I harp on that so much is because there's been situations where claims have had to be litigated because, you know, someone thought they had a loss of value claim when essentially what they had was a minor MCL sprain in their knee and they missed 1 game. But you're not getting loss of value for that. I want people to be very, very clear. It's going to be something that makes you miss a significant amount of time, okay? And sorry to harp on that, but I just want to make sure that we hammer that home, because I don't want people to be buying a loss of value policy and then, you know, spraining their wrist or something and think they're going to get paid. You're not. I'm just letting you guys know that, okay? So
And Eric,
yeah, go
I
ahead.
have a question for you before I lose my train of thought. So on this, I just want to make sure that our viewers are clear on what you're stating. So given an example, you have a collegiate player, they get an injury. That injury is greater than a sprain or something like that, and they're out for, you know, they injured mid-season and they're out for the rest of that season. It's a ACL and a meniscus injury or something like that. They're out the rest of the season and they're rehabbing. So even though they have that pre-existing, could they still buy a PTD and do a LOV, the loss of value rider, even though they have a pre-existing?
Great question. So, and this was going to get down to the process for securing coverage. I was going to get to that later, but I'll get to it now because it's a good question. So underwriters have the right to exclude any body part or any condition that the student athlete has suffered within the previous 18 months of their life. So for example, September 5th, 2020, if we're going to underwrite your son for a disability insurance policy and say last year he tore his ACL, right? But he's coming back. I've actually gone through it twice this year already. They're going to exclude that knee, right? So that knee in its entirety is going to be excluded. So if you can still get coverage again, but that body part will be excluded. So if they go out and tear their ACL again and they can't recover from it to play football, they're not going to have a claim because that body part's excluded, okay? And so what I do a lot of times, I fight with underwriters every day. I go back and say, nope, that's not acceptable. You need to make it this way, or we're going to move coverage elsewhere, what have you. And that's what, hence the name of my company, Leverage, because I have such a big volume of business that I can, negotiate on behalf of the student athlete or the athlete to get things covered that they normally want to get covered. And so what another example is sometimes too is I try to get the exclusion limited as much as possible. So for example, if a student athlete has, and I see it all the time with my college basketball players, they all have patella tendonitis. They're all overworked, overtrained, they're doing too much. And so they get on campus and they have patella tendonitis. And I see it all the time. Mm-hmm. Well, what some underwriters want to do is say, well, we're just going to exclude the knees. We're not going to cover these knees. Well, I'll come back and say, well, listen, the ACL, MCL, PCL, everything's intact. Everything's perfectly fine. He's just got some inflammation on his patellas that's going to be, reduced once he gets with his professional medical staff and they treat him properly and, manage his time on the court or what have you. And so they'll say, okay, cool. Let's do this then. We'll exclude just the patella, but we'll cover the rest of the knee. So for example, if he goes out and, shatters his knee and has an injury, he would still get paid on a claim because the rest of his knee's covered that would got injured. And so, but a great question about exclusions. I hate exclusions. It makes me not want to sell insurance when I have exclusions on policies. It really does. I mean, I feel bad for these guys that are coming back that want something covered and just, they have to understand these underwriters and these insurance companies are betting millions and millions of dollars on these things. So they're going to always err on the side of caution and, exclude a body part they don't feel comfortable with. Now, if I have a junior in college and a guy tore his ACL his sophomore year in high school, 5 years before, and he's played 2 full seasons in high school and he played 3 full seasons in college. Now they're probably going to cover the knee because they know it's recovered. And a lot of times guys even come back stronger and better after their torn ACL because they've strengthened that knee and there's no weaknesses in it, what have you. And so again, there could be exclusions, in some situations. The best answer is no exclusions. Second best answer is limited exclusions. And then third, I hate delivering exclusions, but it is what it is. And I have to understand that. And so reviewing a loss of value, I want everybody to understand it's also not for everybody. Loss of value used to be sold for guys projecting the first 2 rounds, and then guys were getting claims paid out to them that should have never had loss of value in the first place. So the parameters on loss of value have been severely clamped down and restricted now. So the only guys qualifying or getting loss of value are going to be the top projected, for college basketball, it's going to be lottery picks. For, college football, it's going to be top 10, top 15 projected players. And so if your son's not projected, they're clear cut by a consensus, then they're just not going to get it. And I would love to get it for them, and because I sell insurance and make more money, and that's great, but it's not for everybody. It's going to be for your top echelon players that are clearly projected in the top 10, top 15 of the NFL draft. Okay. Now with loss of value too, a lot of people see there could be some gray area, right? Where they're like, well, I got hurt and, you fell in the draft. Well, was it because you fell in the draft because you hurt your knee, or did you fall in the draft because you were missing class and you were in the coach's doghouse and then you didn't get as many snaps, or whatever different reasons, right? So people can say, what came first, the chicken or the egg? Well, for me as an insurance producer, I always hang my hat on the injury. Well, what was the injury? Okay, this is an injury policy. We're going to base it on the injury. And so some people don't like that gray area. So what another company did was created a product called critical injury, right? And the way critical injury works is you will have a specific benefit paid out to you for a specific injury, okay? And here's what it looks like for critical injury. So there's 2 categories, category 1 and category 2. Category 1, torn ACL, Achilles, patella, UCL, which is Tommy John, where they replace that nerve. They take a tendon from your forearm and put it in your elbow. I had one of those for a college football player last year. And then also too, we just saw Ben Roethlisberger for the Steelers have Tommy John surgery. So it's typically a baseball injury, but we're seeing more and more quarterbacks have it too. So it's important for them to have that covered. Rotator cuff, loss of sight, cancer, heart attack. So if they suffer this injury, regardless if they fall in the draft or not, regardless if they come back to school or not, if you have the coverage and you suffer this injury, you will get this $250,000 tax-free benefit paid to you. Okay. Category 2, torn pectoral muscle, which is chest muscle, bicep, tricep, hamstring, or adductor, which is groin. Full tear requiring surgery, you'll get a $100,000 benefit. So now read the fine print at the bottom. This is really important. Must be high grade complete tear. So complete tear, not a sprain, not a strain, a complete tear, okay? Requiring reconstructive surgery within 30 days, except for torn ACL, which is 50 days of the accidental bodily injury. So a lot of times doctors want to wait to do ACL to let the swelling go down a little bit. But this is how critical injury works. This is black and white. You suffer the injury, you have the surgery within 30 days, you get paid your benefit. No questions asked. That's it. That's how it works. Okay. I have one of these processes right now. I had a college football player blow his Achilles on Tuesday. He had surgery yesterday, clear cut, torn Achilles. He's going to have a $250,000 benefit paid to him within 30 days of his surgery happening. Okay. So these things do happen. These injuries are very common. And the coverage is a little more expensive. Coverage pricing we can discuss later, but depending on when you secure the coverage and how much time and risk you're going to have, it's going to make the cost go up and down, what have you. But I see a lot of schools supporting for this coverage now because, these are very, very common injuries, torn Achilles, ACL. We see these things all the time. Okay. And then also too, I'm glad heart attacks covered there too, because, with all the issues we see COVID causing to the respiratory system and to your cardiac system, if it causes a heart attack, they'd have the benefit paid to them as well too. So that's critical injury. Again, let's review real quick. So permanent.
Eric, I have a question real quick on critical injury. Does critical injury have an elimination period, like the permanent and total disability? Does it have an elimination period where they have to wait a certain amount of time? I know that they have to have the surgery within 30 to 50 days, depending on what type of injury it is. But is there an elimination period as well?
No, as soon as you have the claim. And now the first thing in claims, I always want to manage expectations, let people know, listen, this is not a fender bender, Allstate car insurance claim. It's a lot different claims process. So we're going to have to pull all the medical files, which could take, I always tell people too, I'm at the mercy of these claims administrators pulling medical files. No clawback, and they all go their separate ways. Okay. So, and then there's another company that'll pay you year by year. Okay. So, and this is where this is my job to make sure I'm educating everybody properly to understand how this works. So there's 4 companies that do it. One company waits 36 months to pay you for the loss of value. One company will pay you right away, but they have a clawback provision. One company will pay you right away, but they don't have a clawback provision. And then one company will pay you year by year. So, and again, each company is going to come back with a different threshold, a different limit of coverage they're willing to offer, different pricing, different wording, all these different things. That's where loss of value can get really complicated. That's why a lot of people say, forget this, I'm just going to get critical injury. If I have an injury, I get paid, we're going to go separate ways. Or forget all of it, I just want PTD in case something crazy happens, I can't play football ever again. I want, $2, $3, $5 million to start a new life with and go on from there. Okay. So, and again, I say this all the time, there's no right or wrong answer. There really isn't, because nobody has a crystal ball. Nobody knows what's going to happen. Nobody knows what your injury is going to be. Nobody knows anything. It's just what gives you the most peace of mind going into the season is the coverage you should pick. Okay. People always ask me, what would you do for your son, whatever. Well, each situation is different. Each situation is, each sport's different, what have you. And so again, to review, PTD, career ending coverage, you're never playing again. Loss of value, you fall in the draft, they pay you the difference of your threshold of what you signed for. Third, critical injury, you get your injury, you get paid out. Okay. So that's the products that are available. Again, once you identify your son as potential pro, let's have a conversation. What's available? What's my school doing? Do we need to get a loan? Do we have to get the school to pay for it? What have you? Okay. So before we move on to the process for securing coverage, is there any more questions about the types of coverage that are available?
I have a quick question.
Yes,
Can
please.
you go back to your critical insurance
Tab.
Yes, please.
There we go.
Yes. So on those categories, I think you mentioned that these are more of the common injuries that you see. But But is that across all sports? So would that include like gymnastics or swimming or track and field or baseball? Or is this pretty much just limited to kind of football, basketball, some of the top 3 or 4 sports?
Great question. So this is the college football, if you can look up here, CFB, this is the
Okay.
college football critical injury. The
Okay.
difference between the critical injury categories for football, baseball, basketball, and hockey are different. And the only difference is this: for basketball and baseball, they will offer a category 2 for a herniated disc in the spine. That's the only difference. Category 1 stays the same across the board, but category 2 will change for basketball and baseball. Okay, and they will add a herniated disc of the spine, whether it's upper back or lower back. They just add that there. They don't want to add herniated disc for college football just because it's so common. And I guarantee you, if all 3 of your sons did an MRI on their spine, they would find some sort of bulge or small herniation in their spine just because of the amount of weights they lift all the time. They're always getting tackled. They're tackling. Football players sustain bulges and herniated discs in their spine all the time. And herniated discs actually ended my career. I had one my rookie year in 2001. I dealt with it my whole career. And finally in 2008, I just hung them up because the sciatica was so bad and it was just awful. But herniated discs are very common. And sometimes they cause maybe back spasms or a little tingle here and there, and they kind of go away. They just harden up or they protrude back and we're all fine. But a lot of times they will turn chronic or degenerative. Whenever you hear the word chronic or degenerative, it's the underwriters, their antennas are up. They don't like those words. And so, but again, for baseball and basketball, there's a herniated disc provision on category 2, just because it's not as a physically straining sport on their spine. Okay, they're playing baseball, they're running around. And basketball, it's not like football where you're in a 3-point stance, hitting people every play. It's totally different. So, a great question. Thank you for that.
So does your company offer insurance coverage or critical insurance? Critical injury coverage for other sports, like I was mentioning, track and field, swimming, tennis. Do you also?
Yeah.
Okay.
As long as we call it value assured. As long as we know there's a potential future earnings for that student athlete, yes. So I've done insurance for women's college soccer. I've done a women's swimmer. I've done men's soccer. I've done a track star in college. I've done, because the way those Olympic athletes are going to make their money is in endorsements, right? They're not going to be, there's no league. I mean, there's tournaments and, and things, but they're going to get a big check from Nike or Adidas or what have you. And that's future earnings that we can protect you. I've done collegiate wrestlers. I've done a lot of different, Olympic athletes. Now, again, like I said, as long as their value is assured and we've done the research to say, listen, this is the potential earnings, or they may have an offer sheet on the table where they're in college or they're a junior and they have a chance to come back for their senior year, and whatever apparel company is going to offer them $1 million to sign with them, they go to the school all the time and say, listen, I want to come back to school and run my senior year and win a national championship, but how do I turn down this $1 million? Well, the school will say, okay, well, we'll get you $1 million policy, and if something crazy happens, you can, you're going to get your education, but you're also going to get your benefit for the insurance as well too. So again, great question. And thanks for clarifying, because I've insured multiple Olympic athletes for all different sports, all different genders as well too. So absolutely.
Thank you.
Of course. All right. Any more questions before we move on to the process of securing it, which is the most important thing? Anything?
Nope.
Okay. All right. The most important part of these policies is the underwriting process. Okay. I pride myself on being a stickler for details and ensuring that I get as much information as possible from the student athlete and the medical staff. I don't want to ever have any questions not answered on my applications. I don't want to have anything underwritten that's not fully disclosed. Okay. So when I do these applications, I let the student athlete know, listen, Tell me the truth. I need to know everything, because if there's something you don't tell me about, and then you go out and play and you get injured and we pull your medical files and we notice that, oh, you didn't mention that you had a knee strain last year and missed 2 weeks, and then you had that knee blow out, you're not going to get a claim paid out to you. So we make sure that we understand that too. And I always make sure that I involve the team medical staff to provide an exam during the process. So the process is this: there's always a part 1 personal application that the student athletes complete. Okay. I typically do it over the phone with the team trainer and the student athlete. The team trainer is involved because the team trainer sees these kids every single day, and they have every single medical file right in front of them. They have every single rehab note right in front of them. They have all this information, all the dates, because we go through and we'll say, hey man, I had a hip pointer last year against Penn State. When was that? You know, oh, trainer has it. Week 6, hip pointer, second half, you came back to play. Okay, let's document it and put in the application. Okay, it's very important to do that. Secondly, then we have an actual team physician the team doctor does an actual exam on them and completes a part 2 application. The reason why we do this as well too is to make sure that, number 1, the doctor signs off on any pre-existing conditions to let you know what's in the policy. And then also 2, they'll provide any medical documentation that we may need. Okay. So if we got a junior in college football player that's going into his junior year, and his freshman year, he maybe had a Jones fracture in his left foot, broke his left metatarsal, what have you. Okay. Let's get that x-ray report. Let's get that surgical report if he had a pin put in there. Let's get all the rehab notes, everything, so we can share it to underwriter and say, listen, we had this injury 3 years ago. He had a surgery, the pin was taken out. He's fully recovered, no ongoing issues, but we want to disclose this to make sure you know what's going on. Great. We feel fine about the foot. We're going to cover the foot. Okay. So it's very, very important that we do it this way, just because transparency's optimum in these situations. There's 1 or 2 companies out there that don't require a part 2 medical exam completed by the team physician, which is a major red flag to me. I just, in particular, I don't work with these companies just because I want to make sure that the student athlete, the team trainer, the team doctor, and myself and the underwriters are all on the same page, and we have this information put together for them and submitted correctly. Okay. Because again, like I talked about with the 12-month elimination period for PTD, what have you, we can underwrite these policies on the applications, but if there's a claim, they're going to pull every single medical file on you from the last 2 years and go through it with a fine-tooth comb for due diligence, just to ensure that they're paying a valid claim. Valid claims get paid out. I've never had a valid claim denied or any issues with it. Okay. From what I've read outside, and I've never had it happen to me, but when you see claims getting litigated, it's because there's a misrepresentation between what you put in the application and what's really in your medical files. Okay. So that's why it's monotonous and it's annoying and it's tedious and it takes time and effort, but I want to make sure it's done correctly on the front end, so that when we have a claim in the back end, we know exactly what's going to be covered and what's not covered. Okay. So again, being truthful, being honest is the best policy in life, but especially in these underwriting these policies as well too. Okay. So any questions about the application process, underwriting process, or anything like that? No? Okay.
No.
All right, cool. So anything, you know what I'll do? Because I'll explain, can I explain Lloyd's of London a little bit? You want to hear about that?
Yes, sure.
Okay. So Lloyd's of London is not an insurance company. Think of Lloyd's of London as you would like the Federal Reserve. Like, you don't go to the Federal Reserve, the US Federal Reserve, to get a loan. You go to Bank of America, Wells Fargo, US Bank, what have you, to get the bank to give you a loan, right? Same thing with Lloyd's of London. You don't go to Lloyd's of London to get a quote or an insurance policy. You go to what are called cover holders, okay? And there's 6 main cover holders. Cover holder is a fancy word for the word carrier. So think of an insurance carrier. Allstate, Lincoln, Prudential, Hancock, those are insurance carriers. Lloyd's of London has 6 different cover holders, which we could also call carriers. And those companies are the ones that provide, 6 different quotes, 6 different options for loss of value. Only 2 of them do critical injury and what have you. And so my job as a fiduciary in these situations is, if a school reaches out and says, hey, Eric, we've got this top student athlete, he needs a quote, please let us know what you can do. Go into market, I'll get quotes from all the companies. I'll give them over to the school to review. We'll go through everything and make a holistic decision from there. Now, the way each cover holder is built is by what's called a collection of syndicates, okay? And each policy has a syndicate list, or called a security list, okay? So Lloyd's was founded in the 1600s in these coffee shops where these rich businessmen would sit around, and all these ships were going all over the world, you know, tea ship, you know, what have you. And so these ships would sink. And so what they were doing is they would try to insure these ships. And so this is where the term underwriter came up too, where a ship owner would go into these pubs and say, hey, I'm going from London to Spain. My ship's worth $100,000, okay? And he'll write the boat name on the wall, the Nina, the Pinta, Santa Maria, whatever. And they'll draw a line under it and they'll then put their percentage of the risk underneath there. So you put your boat, the Nina, draw a line, and the underwriter will walk up and say, I'll take 30%, I'll take 20%, I'll take 10%, I'll take 5%. All these different people subscribe to this risk, what are called these syndicates, and they'll take that portion of the risk. So if the boat or the ship sinks, then that $100,000 is paid out pro rata per supporting syndicate. So each one will pay out 20,000, one will pay 30,000, all the way down. And then obviously these policies, I've written policies upwards of $40 million where, okay, we have a lot of people subscribing to these risks. So if this guy goes down, you're paying 5 million, you're paying 10, you're paying 2, what have you. And the way they do it is just to spread the risk out so that if there's a hit, that one company just takes this massive hit and they're out of business, basically. So that's the way it works. So when you hear Lloyd's of London, all these policies are underwritten by Lloyd's of London, okay? And Lloyd's of London is not an insurance company. Lloyd's of London is a collection of underwriters that design these policies and these coverages. So when people are talking about this and stuff and they say Lloyd's of London, you should say, well, who at Lloyd's of London? What cover holder? What broker? What have you? And that's when you start getting into the details to find out who's doing what and how they do it. Because again, all of them have different pricing, all of them have different wording, all of them have different parameters of coverage. They're all totally different. So it's important for you guys to understand that too. So, and now you know where the term underwriter came from. It's from Lloyd's of London, from writing their percentage of the risk underneath the name of the item that's insured. There you go.
And Eric, I have one final question as we near the end of the show, is what are the 5 top questions that you feel that student athletes should be asking, or parents, viewers today watching, as they're having this discussion? Hey, we need to start thinking about disability and life insurance and things like that. What are the top 5 questions they need to ask to make sure that they're getting as much information as possible for a potential company that they may go with?
Yeah, great. So number 1, talk to if it's your head coach, position coach, development office, compliance officer, who have you, ask the question, what is your policy on disability insurance? Okay. What is your guys? Because all these schools have different policies set up. They'll say, okay, we give each student athlete $15,000, or we'll give each student athlete $50,000 worth of insurance. We don't pay for insurance. You have to get a loan. So number 1, ask what their policy is on these different types of coverages. Okay. Second question, I would ask them, who is your provider? Who's going to be going to market for my son? What kind of experience do they have? Are they licensed in all these states they work in? Do they have insurance? Do they, vet out the broker, vet out who's going to be processing these policies for you, because that's the person that's going to be holding your hand during these claims, and that's going to have your back throughout this claims process. Thirdly, gosh, I would assume to ask, I don't know if I have 5 questions exactly, but I would say number 1, what's the policy? Who do you work with? And then third, how do these get paid for? There's a thing called the Student Assistance Fund. It's a slush fund that each university gets. It was originally designed to, pay for suits when teams travel, or iPads, or summer school, or anything ancillary that falls outside the general budget. Well, about 6 years ago, an SEC school came along and said, well, we have a loophole that we can pay for insurance with ours. So boom, everybody started using their SAF for insurance. So find out, do they use SAF, or are they going to have to take out a loan? So I'll do that. What's the policy on disability? Who do you work with? Who's your provider? And then, how is this going to get paid for? And And you have the right to ask all these questions, and there's nothing wrong with
Absolutely.
asking a question. It's, you know, your son's away from home, he's playing football, he's at risk playing football, and there's things that can happen. And so you have the right to these questions. And you know, again, and if everybody wants to follow up with me and ask me, you know, what they should be asking, I'm happy to provide that information as well too.
Well, thank you.
Yeah.
Thank you. And let's see here. And Eric, can you close out? Is there anything other on the screen that we need to share? Are we sharing?
No, I think I'll wrap it up with, I think what we were talking about earlier is just protecting what you've earned and protect what you're going to earn. If we were discussing that. Your sons have worked so long and so hard to get to where they are in college. You know, if they're 18, 19 years old, think about what they've invested the past 10 years in training and education, all these different things to get them where they're at. So protect what they've earned. I mean, they protect this ability to be on college and get an incredible education, and protect their ability to play football. And then next, if they're 12 to 18 months away from signing a lucrative, you know, professional contract, protect that future earnings. You know, look at what you could be, you know, what kind of insurance products are available for you to protect those future things, which can essentially really, I mean, they could create, these benefits could be creating generational wealth for some of these people. And then, you know, lastly, for the life insurance thing, you know, later on, once they do turn professional, I think it's wise for them to consider at least some term insurance at first. And then if they accrue an estate tax liability, what have you, then we can talk about permanent insurance. But my job is to get these kids to the next level, get them protected and get them there. So again, you know, protect what you've earned and protect what you're going to earn.
That's awesome. Those are some good tidbits for entering the zone. So, I mean, I've just been blown away. This has been very informative. And I know that the moms out there, because like you were saying, Yvette, I mean, you didn't even know about this. And I didn't either until, you know, Alabama provided this service, and then yourself, Shalonda. So I just appreciate you and just providing this. And Shalonda, I didn't know if you had any more comments you wanted to provide.
I just wanted to tell Eric, just thank you for just educating us in the process and explaining what permanent disability is and what loss of value is and what critical injury is, and you know, what Lords of London really is, that they're not really an insurance company. Because I think in the past, most people assume that they are an insurance company known for insuring people's celebrities and their legs and that kind of stuff. So I thank you for like explaining that in layman's terms where we can all understand that. So thank you.
Of course. Thank you.
And so, you know, Eric, we, again, just off of what Shalonda said, thank you for just being a guest on this episode of Moms in the Zone. And we know for, you know, without a doubt that you've shared some great information with our viewers, with our families. And so we greatly appreciate you being on this episode of Moms in the Zone. And can you do one thing before we end the show, Eric? How would our viewers get in contact with you? If we have a viewer watching the show today and they say, hey, you know what? We want to get in contact with Eric of Leverage Disability and Life Insurance Services to just ask you more questions. How would our viewers get in contact with you?
Yeah, you can just go to do a Google search, go to my website, leverage-is.com. And there's a contact tab in there. There's an info, it's a Leverage info email address that I check every day, and just send me an email. I'll respond back and set up a time to set up a call, and we'll go from there. But the best way is always email first, so that we can find time to set up the call, and then just go from there. But yeah, I'm really good about email. So just go to my website, leverage-is.com, and then go to contact, and then send me a note, and I'll get back to you.
Right. We make sure that all our viewers, you heard that. If you have any questions regarding disability insurance for your student athletes, get in contact with Eric, the founder and CEO of Leverage Disability and Life Insurance Services. And so that wraps up this episode of Moms in the Zone. We thank you for tuning in, and we'll see you on the next episode of Moms in the Zone.